Stop wasting your time. Stop studying the standards that are outdated. We now have a brand new standard, IFRS 18, and it actually changed some of the standards. And some changes are going to be minor and not tested in either financial reporting or SBR exam, but some of them are pretty big deal. So IAS 7, the standard that discusses the cash flow statement. First of all, now we have to start with the operating profit or loss if we are using the indirect method of calculating the cash flows from operating activities. Before, companies could have used profit after tax, profit before tax, operating profit, whatever they wanted. Now, the IFRS decided that we are going to make the financial statements more comparable, easier to understood by the users of the financial statements. So everybody is going to start with the operating profit or loss. Also, it's going to be just more logical, because if these are operating cash flows, then why the hell would you use profit after tax, for example? Mind that very important change, because that can be tested in a discursive question. And before I continue, please subscribe to the channel so that you don't miss the new videos. Now, when we're talking about interest and dividend, before, companies could choose any location for interest or dividend. It could have been operating cash flows, investing or financing cash flows. Now it's not the case. Now, interest that is paid, dividend that is paid, these are going to be part of financing cash flows. Mind though that when we're talking about the dividend that is paid, we have three types of dividends. We have dividend that is paid to the shareholders of the group, dividend that is paid to NCIs of our subsidiaries, and dividend that is paid from subsidiary to the parent. The last one is going to be eliminated, so not included into the cash flow statement. As for the interest and dividend received, then in this very case, we are going to record those as investing cash flows. This is going to be investing cash inflows. And again, when we're talking about the dividend that is received, dividend received from the investments, so those that we use according to IFRS 9 is going to be included there. Dividend received from an associate or joint venture will be included. But as for dividend that is received from a subsidiary, it is eliminated. These are the main changes to the cash flow statement. We also have IAS 8 that is changed. Now we call it basis of preparation because part of the requirements from IAS 1 migrated to the new standard, to the updated standard. It's not a big deal. And chances are that if you learned IAS 1 before because you're a retaker and IAS 8, then conceptually everything that you know is going to be up to date. But make sure that you understand that currently we don't have IAS 1. So whatever we had in there is going to be either in IAS 8, basis for preparation. So for example, the going concern issue, or we are going to have it in our IFRS 18. So make sure that if you are using old books or if you are retaken, that you pay attention to the new amendments to the standards. And I have a separate video about IFRS 18 changes, so make sure to subscribe and watch it as well. Bye!